Morning, welcome to Ainsley End of Week News. It's Friday the 5th of February. A bit of insight today. Precious Metals 2021, price forecasts from the master. The CEO of Metals Daily, Ross Norman, has an unparalleled track record of winning or near winning the annual LBMA price forecasting survey, including winning it for both gold and silver last year. So what does he see for 2021? Remember, he is talking US dollars, so just multiply everything by 1.3 approximately. Increase about a third for AUD pricing. So gold, the average predicted 2,225, the high 2,285, and the low 1,810. We expect gold to perform well in 2021, although at a slightly more subdued rate compared to 2020. Specifically, we're going to see ongoing US dollar weakness, deeper negative real rates in the treasury markets, and a significant rise in unproductive debt as the Democrats open the spigots with fiscal stimulus as supporting factors. With the economy still contracting in Q1, we expect a bounce in H2 as the vaccine frees up the economy. With the economy comes demand pull, as well as cost push inflation, further fueled by the high velocity of money, leading to expectations of much higher inflation, notwithstanding the weak labour markets. As in 2008, central banks are doing whatever it takes to save the economy, but the second-order consequences of the measure put in place will weigh on markets. As such, we will see concerns shift from herd immunity to herd insolvency. Financial markets remain vulnerable, and we think investors will continue to see gold as the near-perfect antidote. In short, the bull run that dates from mid-2018 still looks very much in place, and we see good gains ahead, albeit at a slightly slower pace. Onto silver. Average, $30.26. High, $36. Low, $24.10. As one of the best performing metals in 2020, we see silver maintaining that outperformance. Investment demand for both physical silver coins, bars, as well as the ETF, now at over 1 billion ounces, are likely to continue showing impressive gains and reflects strong demand for safe haven assets in these troubled times. As the silver bull run continues, we expect the gold-silver ratio to continue to decline as silver outpaces gold. Silver bar demand is likely to be led again by the US and Germany, which may be partly offset by weaker demand in price-sensitive India on record prices in rupee terms. Improving investor demand is, however, being offset by weaker demand in some key industrial applications, including thrifting in the voltaic sector and in the automotive sector. Onto platinum. Average $1,316 or $1,316. High $1,520 and low $1,000. We foresee good gains in the broader commodity complex in 2021, but with platinum in particular. In a post-COVID world, we forecast a solid recovery in global auto sales with the implementation of the Euro 6D and China 6B emissions regulations for light-duty vehicles, seeing higher loadings, with Chinese auto sales looking at a 23% gain to 27 million vehicles, and US sales up 14% to 16.3 million units. Perhaps more importantly, there is good momentum being built with investors through ETFs as well as coin and bar demand, Japan in particular, especially with a wider awareness of platinum's key strategic role in the growth of the hydrogen economy. 2021 is likely to see platinum in a key deficit or a supply deficit for the third consecutive year, with demand outpacing supply by about 240,000 ounces. Although a smaller deficit than we saw in 2020, there is nonetheless a cumulative effect. A rising tide lifts all boats, and platinum, like its sister metal rhodium has shown, looks fully prepared to benefit. As a footnote, the previously discussed items clearly anticipate no major crash in financial markets as such. Should that play out as many predict, while again metals possibly get sold off initially in a liquidity squeeze, 2020 illustrated how hard and quickly they rebound to gains far in excess of what he is predicting. As we shared recently, we repeat the warning from Wall Street legend and founder of GMO, 82-year-old Jeremy Grantham from CBE. The long bull market since 2009 has finally matured into a fully fledged epic bubble, featuring extreme overvaluation, explosive price increases, frenzied issuance, and hysterically speculative investor behavior. I believe this event will be recorded as one of the great bubbles of financial history, right along with the South Sea bubble of 1929 and 2000. These great bubbles are where fortunes are made and lost, and where investors truly prove their mettle. For positioning a portfolio to avoid the worst pain of a major bubble breaking is likely the most difficult part. Every career incentive of the industry and every fault of individual human psychology will work towards sucking investors in. But this bubble will burst in due time, no matter how hard the Fed tries to support it, with consequent damaging effects on the economy and on portfolios. Make no mistake, for the majority of investors today, this could very well be the most important event of your investing lives. Speaking as an old student and historian of markets, it is intellectually exciting and terrifying at the same time. It is a privilege to ride through a market like this one more time. Norman's price forecasts do not include such an outcome, but even if not exceeded, those gains against the losses anticipated by Grantham become even more meaningful. Wow, that's news for this Friday. Well, we hope you all enjoy your weekend. Remember AinsleyBullion.com.au for all things physical, Ainsley Wealth for all of our cryptocurrencies, and GoldSilverStandard.com for our own cryptocurrency built and backed by real gold and silver. We'll catch you Monday for more news.